I think we should do some like intro thing again because the other one maybe could be replaced.
Let's
Well, no, I think it's funny, but
just do it again anyways.
yeah, let's do it.
All right.
Whenever you're ready.
Whenever I'm ready. Last time I did the whole thing.
I
You
know,
did
but
it.
I gave it that punch at the end.
You did give it the punch. All right. Hey guys, welcome to the Toronto Real Estate Show. Thanks a lot for watching. Please like, comment, and subscribe. We really appreciate it.
Yes, thank you to all of our new subscribers that are about to press the subscribe button now.
Ding ding.
Ding. That was good.
We're one-shot wonders, buddy. That's all we need.
Unbelievable. Is this going to ruin everything? Is this going to make Dr. Roboto? Can you hear me?
People are going to know it's a virtual background now because they didn't know before.
Because they couldn't tell before. Look at me. I'm on the angle. I've got all kinds of weird shit going on. Let's let Daniel Foch. It's Foch. I learned that. Foch.
Oh.
I learn things, you know?
Better not to say.
It sometimes it's easier.
If you don't know.
Absolutely.
Better to say less. Sometimes saying less is more.
It would make for a really entertaining TV.
Yeah, to not say anything.
Is this even considered TV? There he is.
No.
Daniel, on mute. How are you?
Good. How are you guys?
Very good. Good morning, sir.
I like the sweater. He's got merch. Darryl, we're behind.
We're way behind.
He's got merch. Holy smokes.
He's got merch, a following, viewers. Like, we're way behind on this guy.
Oh, you guys seem to be doing a pretty good job out there.
Thanks.
Well, it's recent. It's all recent.
It's very recent. But if you only saw the hard work behind the scenes that we've had to do to get to this point here, holy.
Yeah.
Yep. Yeah, a lot of boots on the ground.
Why can't I get rid of this? Okay, this is a very professional show, just so you know. We keep things very professional around here. So,
so no swear words?
Only fuck and piss are off limits.
Yeah, PG 15 swear words.
Sounds good.
Nothing that my kid said when he was 3 is allowable on this show.
Okay.
So how are you today? Good morning. Welcome to the Toronto Real Estate Show.
I'm good. I just wanted to let you guys know I have a hard cap around 10:45, 10:50. Is that cool?
Perfect.
Yeah, that's good.
We're right on time today, so we're good.
Yeah, everything looks like we're ready to rock.
Yeah.
Hard cap 10:45. I think
Who's
so.
the hostage that we got? Who's the hostage that we got in the chair today, Darryl?
Yes.
Why don't you do the intro?
Well, we would like to welcome to the show Daniel Foch. Did I say that right?
You did. One of the few.
Boom. You see that? That's why we do research around here. I've been stalking you lately. Yeah, so we have Daniel Foch. He's from Foch family. They're a brokerage. It seems that you're up in Georgia area.
Georgina.
Yeah, Georgina. Sorry.
Yeah, it used to be more Keswick, but Keswick was like the butt end of every joke. So the municipality's been spending a lot of time just making sure that everybody calls it Georgina.
Georgina. Yeah, my daughter played hockey in Georgina. It's a nice place.
Love it.
Yeah, definitely a little hockey town for sure.
Oh yeah, big time. They killed us. Yeah, so welcome to the show. We see you on Instagram. We see you all over the place. You're also part of another company called, was it Avina?
Yeah.
Yeah, where's my notes here? Avina Capital, thanks. So you are, I guess, one of the founders of this company here. You are also...
No. I work on their team, sort of on origination. Like we do a lot of cross-pollination of deals. So they'll finance a lot of stuff that I'll bring through on the development side. Sort of started out working together on joint venture structure just because they had that ability within their ranks. And so that's sort of where I do a lot of my interaction with the development world.
So tell us. So let's back up a sec. Tell us, who is Daniel Foch? What do you do? Because your your summary on your website is interesting. Makes me feel like you know a lot about development, which gets me really super excited to talk to you.
Yeah. So I'm a real estate broker by trade, and I work a lot in the development space. My brother is a landscape architect. I was raised in a family where basically my mom's been a residential realtor for 30 plus years, and my dad's been selling development land for about the same amount of time. So when I started, I really was just bouncing back and forth between, helping each of them almost as like an analyst. So it gave me a lot of exposure to both sides of the coin there. I would say this year I've been really more focused on residential property just because that's where the money is right now. A lot of the development, I would say in the suburbs, development has been good for like infill stuff, a lot of townhouse demand. But on the investment side, things have slowed on the demand. Like most of my investors are sellers today. And yeah, so and I guess, I don't know if I mentioned, my brother's a landscape architect as well. So him and I are sort of launching a little bit more of a full service development concept right now, focused on mostly like sites that are regulated by conservation authorities, because there's really nobody specializing in that. So you have Toronto Regional Conservation Authority and Lake Simcoe Regional Conservation Authority, and basically they regulate what you can develop where the groundwater runs into either of the lakes in the Greater Toronto Area. So yeah, that's
a bold mission statement, right? of all the people to want to deal with and specialize in, right? Like that's a pretty difficult road to go down a lot of the time. So
You have to be really patient.
For sure. Yeah. It's a lot of patience, and a lot of it is just like collaboration early on in the game. Right. So that's sort of why we decided to go that route with my brother Kyle, because he's a landscape architect. They almost want planning that's led by somebody who has an appreciation or understanding for the natural heritage, rather than a planner who sort of assembles that team to do all those studies. And so, reception's been really good. We've been working on quite a few sites lately, ones that I have listed for sale, or ones that we brought developers in the past, or land assemblies that we've done. And so, yeah, so far the reception's been really good there. He just left a larger landscape architecture firm to go out on his own. So we're sort of just scaling that up now.
So you want to offer a service to people. So when they say to you, hey, I'm looking to develop, or maybe I own the land already, or whatever it is, you guys will be the go-to for all the logistics of getting the approvals, getting severances, getting permits, all that kind of stuff.
For this specific type of project where conservation authority is involved.
Which it's everywhere. Like we have TRCA all throughout the city.
My
You've got,
God. Like Vitali. Remember Vitali's house we talked about? Vitali's house was across the street from High Park, and then the house was like 150 feet set back, and conservation was somehow involved in this from High Park on the other side of the street.
Yeah, for sure. And they're gradually expanding their boundaries too, right? And what we've noticed, because like we started with secondary plans, so we look at suburban secondary plans and figure out, okay, which areas have the greatest opportunity, and the area that we're in, Georgina, would be a good one, because there's like all these major arterial roads that are dotted with like 70s to 90s built raised bungalows, and then you put together 4 of them, you get a 1 acre parcel, and it's in the secondary plan. Let's say you can build 6 stories. But what we found was that when you go to the municipality to get things pushed through the secondary plan through a zoning bylaw amendment, they actually want to know what the conservation authority had to say about the building envelope. So we were like, why don't we just start there, right? Why don't we just start with the LSRCA and go get the building envelope, and then sort of fill that with the density that you're allowed in the secondary plan. So that's sort of how things have been working here. And you got a ton of amazing planning companies in the city, but nobody who really focuses on suburban areas. And because I'm connected in the acquisition side with that type of property, it just seemed to work well. It was sort of a natural flow there.
So that's one of the issues that we've got, right? Is trying to break ground into these areas that are like agricultural, near conservation, not quite in the green belt. Like there's this huge big parcel of land out there that we need to start building on, and it's a challenge. It's very challenging.
Well, especially if COVID is here to stay and this suburbanization of demand is going to be permanent. You know, there's one of the reasons I would say that you're seeing price acceleration is because they can't adapt the supply chain quickly enough to meet this demand, right? Like,
All right, here we go.
Yeah.
Now we're talking. Okay. Supply chain and real estate. Okay, let's talk about that. So, what you guys are talking about doing is you think you're going to be able to speed up the supply chain of product that comes out in these types of situations where conservation is a factor, or are we?
I don't think that's possible at all.
Right.
But,
okay. Good. Yeah. Honesty. We like that. That's good. Honesty. You're not going to like reinvent the wheel here right now, but you are going to carve out a little part of the market for yourselves. Because, I mean, there's obviously a need for that. Nobody knows what the hell they're doing. You design a building, and then next thing you know, you're talking about drip lines, and they're fucking up your whole building, right?
Yeah. Yeah. I mean, like if you get the list of the studies required to develop a piece of property in the floodplain, as an example, like, you know, first of all, it's going to take you 2 to 3 weeks to get a meeting to get that list. And then you've got to go through all of those studies, et cetera. And at the end of the day, you don't even really know if it's allowable. You know, then you've got multiple rounds of comments, et cetera. So there's an increasing list of challenges that obstruct developers in the suburban environment right now. In Toronto, it's sort of clear. It's like, okay, as long as you're going at least relatively within the secondary plan, and you've got a good planner and architect who knows what they're looking at, there's a critical path that you can follow or envision that'll happen. And it's just sort of the timeline that becomes arbitrary because they have a lot of applications. So processing time is a while. In smaller municipalities, like every new project, every increase in density or whatever it is a new precedent, right? Like, you know, if you look at Newmarket, Davis Drive as an example, like every new tower that goes up is bigger than the last one. And so they're breaking ground to accomplish that project. That's
a great segue into this article that came out this week about Mississauga's new 67-story condo. Yeah. Mississauga, they're putting in an application. This is the Rogers property. For a 67, yeah. You know how many places in downtown Toronto you could not even dream about getting a 67-story tower? Now, maybe you can make sense of that for me because you seem to know about planning. How is it that, you know, we're getting 6 and 9 and 12-story buildings in these little outskirt areas that have a GO station, but in downtown Toronto, if you're at like Bathurst and Richmond, you're getting maybe 15 stories? Does that make sense to anybody?
Well, I think if you were to look at almost like the very top of it, right? So like there's the Places to Grow Act, and that flows through into municipal secondary plans. I honestly don't do a ton of work in Mississauga, so I might not be the most qualified person to talk about exactly how that happened, but it could also just be an application and sort of a PR, you know, element that maybe ultimately they're proposing something that is above and beyond what's allowable within the secondary plan.
For sure they are, but it's not like they're going to get 8 stories when they go for 67.
Exactly. So you'll often see these applications that are big, right? That in hopes that eventually it goes to the OMB. If they're outside of the secondary plan, you're almost guaranteed to go to the OMB. And if you have the money, and again, like you almost get the loftier applications because if somebody's like, I know I'm going to end up at the OMB anyway, I know I'm going to be spending a ton of money, I might as well go big so that when it gets knocked down, it's worth all of that extra capital that I had to put in to go to the OMB, right?
So who's building up in Georgina? Is it like De Gasperis and Musso and like gigantic players that can like sit on the land and wait to get whatever they want on it? Or
There's
is
a lot
it
of that? I would say in your at grade detached or townhouse sites, there's a lot of that. A lot of the bigger, older players that have been optioning land, you know, walking up and down these old original concession lots, you know, 20, 30 years ago and buying stuff off of farmers or paying them annual options for farmers. Anything sizable is that. So, you know, Simcoe Landing would be the southernmost site. And you know, you see it in Newmarket, Aurora, East Gwillimbury as well. But the stuff that I would say that's that's meaningful and that's going to be able to respond to the demand that we're seeing right now, which is, you know, a lot of it's more affordable stuff, right? So you're like towns, stack towns, you know, your kind of price floor product. That is infill development, and that's sort of where we decided to carve out our niche in the development space, was focusing on small cap investors and developers who want to assemble land, and have the cash to push through a small project. So basically, you know, what that entails is we'll just take a look at the three markets that we represent. So Georgina, East Gwillimbury, and Newmarket, and we'll put together we do a little bit of stuff in Aurora. We'll put together basically a package of every single site in town, or every single potential assembly that makes sense. We'll approach the owners, and then we'll get an understanding for what density you could get on that site within the secondary plan. So you're almost selling it based on, because the secondary plan can't really be rejected by the municipality. That's like provincial level policy. You just have to pay the fees and go through the processes and studies to figure out how to fit those guidelines into the site that you're purchasing.
So who's buying all this new product up in Georgina? Is it millennials? Is it older people retiring? What's the story up there?
I think it's a lot of the smaller cap developers that have just been sort of pushed out of the GTA, and still either they have a small shop that they want to keep running, or, you know, they're new in the space and wanted to get a meaningful project. A lot of guys that are stepping up from maybe custom builds into, and want to get to that sort of mid-rise scale. That's what's happening in the suburban development space right now. Because, you know, the land cost per buildable square foot is low.
How much?
You're like $30, 20 to actually in Georgina you're probably $30 a buildable. Aurora you're probably, I don't know, maybe like 40 to 60 a buildable, and that's like unzoned, right? So that's raw land.
And that's to build like mid-rise kind of product, or to build low-rise?
That would be mid-rise. Yeah, that would be mid-rise. Low-rise, it varies, honestly. Like, you know, I think site plan approved, you're probably 200, you know, 200 a door would be like, that's for sort of your towns. That would kind of be your cap. And that's sort of the more popular product. Like I have every developer that
Hold on, is that $200,000 per door zoned?
Yeah.
Okay.
That's sort of your land cost there.
And so what does that house sell for once it's built?
I guess it would depend on the market, but if you're like Aurora, you're probably $1 million town, right? More if you're like a 3-story town, maybe $1 million to $1.3 million, again depending on lot location.
So how
you're probably a low 7s townhouse.
And both of those are $200 a foot zoned?
No, Georgina, sorry, 200 would be like sort of the cap there. Georgina, you'd see, I mean, even like some of the stuff we were working on, one in Ajax, you're like 120, right? $150 a door. It really varies.
You were saying that this year, most of the investors are selling. So have you seen that guys are being more attracted to those markets right now to buy these projects over the last year?
Yeah, I would say like a lot
of prices now are a lot higher for
sure. Yeah, like especially I would say like your fringe GTA stuff, price floor markets, you know, Georgina, Durham, like, and I'm sure you guys have seen the stats from Durham, like Durham's still on fire because it's a price floor market, right? Like it's a lot of either, I think I would say it's like boomers who are moving out of the city, and then young people who are moving out of the city, both of whom are expediting their plans, either for retirement or household formation. Those are the people moving into suburban areas, right?
So are the developers saying though, like, we feel like those prices are going to be sustained, so even though it's going to take 3 years to get this project done, it makes sense, and I want to buy today and get these prices in a few years from now?
Yeah.
Good.
I mean, that's the
optimism in the market from those guys.
I would say so. Like that's the only type of person who can compete against, like a developer is really the only person who can rationalize paying as high as end users are right now. Like an investor can't. Like, you know, I was selling a bunch of our investors multiplexes over, you know, at the beginning of the year, and now they're just like stagnant. Like you can't find somebody to buy a multiplex because the caps are like, who wants to buy in the suburban GTA at a 2.5 or 3 cap, right? but based on an end user price, that's where
there's
it's at.
people. Yeah, there's people doing it.
Yeah, there are for sure. Just not my clients, I guess, because I'm pretty honest about whether or not something's a good investment. So I probably don't attract 2-cap investors.
It's the way that the market is. Yeah, I hope you don't. Yeah.
Well, listen, I mean, you have to do something to attract those kind of people. I mean, you have to start thinking about longer, I guess, terms on that property, right? So now you're going to start pricing in appreciation, which is bullshit because you don't know which way it's going to go, right?
Right.
Mm-hmm.
To make it make sense today. So you have to say, okay, either you're putting in like 70% down,
yeah,
right? Or you're going to go 30%, but like by year 8, this thing's going to sing, right?
We're going to get our money.
Maybe. Like,
hopefully.
Hold on. Maybe. Okay, Dan. So we've been putting this to most of our guests lately, and maybe you have the answer because nobody seems to know what the hell is going on in this real estate market. So we've got all kinds of stuff. Toronto condo market's heating up. We're talking about affordable housing. Like, I mean, you're talking like Georgina's affordable, but you just said like $750 for a townhouse, right? That's not so affordable. We got so one of the things I really wanted to touch on today, especially, is the fact that we've got all the banks kind of pushing and pulling in different directions in the news right now. People are calling for, government intervention to cool down this market, and people are calling for, them to stay the hell out of the way and maybe let the market do its thing. So maybe you can help unmuddy these waters because nobody knows what the hell. I mean, I guess that's why investors aren't buying 2.5 caps also, because they don't know which way things are going, right?
I think that the risk tolerance of investors is just lower than your end users, right? Like end users, no matter how you think about it, like ultimately buying a house is committing to a liability, right? You're getting a savings vehicle, and it's leveraged, and the interest, the capital cost is really low. But as an investor, your capital cost is a function of the business that you're running, right? And the business that you're running is a place that pays rent. So for somebody like that, like the risk, if you're buying something that's cash negative, or if you have to put so much equity in to make the numbers make sense, it doesn't really make that much sense in an environment that is so inflationary and that looks like there's a lot of risk on the other side of it, right? But for an end user, you have probably the opportunity cost of currently renting. So instantly, if you purchase a property, you save that, right? Then you're thinking about the opportunity cost of interest. If you wait a year or 2 years and rates are higher, okay, now you've saved yourself, let's say $10,000 to $20,000 at current prices in just interest over the first couple of years. So end users, it's a lot easier for them to rationalize, right? Whereas investors, I think, like most of them would say it just doesn't make sense. It's not a compelling investment in today's market.
Because of the length of the term of their view?
Well, no, just because the numbers on the acquisition don't make
they don't have control of their income, right? End users, they know, okay, I got this job, I'm working as a teacher, I'm making $70,000 for the next 20 years. I can afford this mortgage.
But
market goes up or down, I know I can pay that bill. What's my monthly payment? The market's not really as much of their concern, but the investors, it's like, okay, I got all these tenants, they need to be paying their rent. If I'm already negative cash flowing and then they stop paying, like there's just a lot more risk. That's out of your control.
The landlord and tenant board is backed up like crazy. Like, I've seen a number of closings delayed by tenants failing to vacate, et cetera. So, there's no recourse for landlords either, right? Like there's just so many different question marks that you can't really erase with the current legislative environment that I think most people have just said, you know what, I'm just going to wait and see what happens. And if it continues to inflate, then whatever, I'll have to go find somewhere better to put my money. But like, it's not extremely compelling to investors to buy in the current market.
Okay, so you just said
I like what he said there, though. I like
if it continues to inflate. So hang on a sec.
We caught that.
Both of us caught that. So hold on a sec.
We're in a bubble. We know that, but does it have to deflate? I mean, will it continue?
Will it deflate? Like, hold on a sec. Didn't the states just announce a $2 trillion stimulus plan? Now I know when things are going shit. Like they say, when the United States sneezes, Canada catches a cold. So, I mean, if they're on fire and are fully stimulated, don't we get some of that runoff too, on top of all the wonderful prospects we have coming down the pipe here?
Yeah, I would argue that that would be the case, but I guess it depends on what, what's, let's say, stimulus is going to have the greatest magnitude, right? Or like what component of the economy is going to have the greatest magnitude?
So what are you worried about? Are you worried about something right now?
Not really. Like I think that I would be surprised if we saw a massive correction, but I think the market's already finding an equilibrium, and at least in the suburbs, I think that people have sort of tapped out and said, you know what, these prices are unacceptable. A lot of buyers have capitulated. A lot of them have gone back to urban product as a fair replacement. So on the micro, you're just seeing like, sort of a reurbanization of demand back into Toronto, which is a good thing. I think that that's how the city should function. People should make exchanges between the suburbs and urban area.
So we are seeing that, right? Like I saw a few posts on Twitter saying that, multiple offers don't feel the same anymore, and
yeah, for sure.
Slowing down a little.
Well, for sure. Like I would say you're seeing a decrease from like, 20 offers to like 4 or 5 a property on, and that's on underpriced product, right? Like, and then, the market price product, like you're starting to see, I've seen a number of SBP conditions lately. Like, I've seen a lot of conditional sales. It's definitely not.
Conditional sales accepted?
Yeah, man.
What?
And, I know.
What?
Right?
Where's this? Let's make 18 of them today.
I've seen stuff in Newmarket.
Accepted conditional sales?
Have you seen a lot of people raising their prices after the offer date didn't work?
Yeah, that's a good one. I like that one.
Yeah.
Yeah, that one.
Yesterday, my partner was in 18 offers in Bethany, Ontario.
And didn't sell it?
$78,000 over asking.
Did sell it. Okay.
Yeah, so I think that's
still happening.
Where's that? Where was that?
Bethany's up Highway 35 area.
Bethany? Where the hell is Bethany? Who's moving to Bethany?
18 people.
Should I pull up a map?
Only one though.
Comment down below if you know where the hell Bethany is.
Yeah.
Send me the directions. Yeah, nice place. Water? Any water?
No, not really. No.
No water, but a nice place. What's nice about Bethany? Farm?
They got that Buddhist temple I was talking about last week.
Temple?
Yeah, and they got a liquor store.
Well, hello. I mean, isn't that a prerequisite?
That's the only businesses that's open right now, so that's really all you need.
They're definitely a necessity. That's like the number one thing, that they have to find the place for the liquor store if they're starting a new town.
You build the town around it.
Yeah.
Obviously. I mean, that, and I guess now a pot shop.
I have a question though for Dan, because I know we're short on time today. I heard in the rumblings in the city here that parts of York region, a lot of the rural residential properties, they want to convert to agricultural to protect some of the development that is going on.
Where?
Is that true, or is that rumors?
So you're saying that, I would say definitely we're seeing like small municipalities trying to, I've seen towns literally trying to take properties that are within the urban boundary. Like, so I think what you're talking about rural would be outside of the urban boundary, right? But within the urban boundary, trying to convert things to EP, or not ag, but to environmentally protected sites, right? Okay. Which is like, it's actually, I think it's a direct violation of sort of like the agreement that happens between the municipality and the province in the Places to Grow Act, right? It's like whatever's in the urban boundary. The reason that we came up with secondary plans is that the province directs the town to say, this is how much density you need to get on all of these sites. And if we calculate, okay, all the entire landmass of all of the sites that we've put into the secondary plan, and you need to get 40,000 people into this town in the next 10 years, here's the units per net residential hectare that you need. So like, that's basically the density, how many units per hectare of land to accomplish that goal, right? So if you're taking a property out of the EP, or out of the official plan or the secondary plan, and make it zoning it EP, all of a sudden you just, and like this, one of the sites that I have an example of that would be like 4 acres, right? That's 4 acres worth of units. That's never going to hit the market if you do that. So yeah,
I can keep density down.
Exactly. Well, yeah. So then you have to go put that somewhere else. But then based on the calculations that the province laid out for the municipality, you'd have to revise those calculations, right?
So we keep talking about secondary plans, and I mean, most people don't even know what the hell that is. But
right.
If you do know what that is, I think you know that most of them are like super out to date, right?
Yeah, like, so I think they have to update them every 5 years. So Georgina's right now actually is in the process of being updated. My brother's on the team that reviews that with the planning partnership. And so, yeah, they basically re-inventory all of the land, check all of the goals that they've accomplished in the past period of time, and how far they've come to meeting those places to grow act targets. Because that ultimately translates to like infrastructure spending, government like allocation of provincial funds or regional funds so that municipalities can continue, right? And I think like if you look at a place like Newmarket or Aurora, maybe they'd be doing a better job. Or if you look at a place like Mississauga,
Mississauga.
Milton, Oakville, those are places that are really, really doing a great job with their secondary plans. York Region, not so much, right?
No, I mean, even North York. I worked on a site at Bayview and Shepherd that had a secondary plan from 2003 or 2006 in place as they were building that Shepherd line out to Bayview, right?
Yeah.
And the site in the secondary plan specifically called for like 2.4 times density on a crazy gigantic site, right? And so I mean, you can't use that. It's right beside a subway station. Right? It completely contradicts the places to grow act, right? Because doesn't it say within a certain distance from a subway or a major transit node, like a GO station, you get even more density?
Yeah, so there are, and like that's sort of where the planner would come in and say like, okay, yeah, here, this layer of policy is actually should be more important than that secondary plan, because there's, like you said, transit focused development, et cetera. Because like if you have a 1 acre site and you're going like in North York, you're getting a 90% or 100% lot coverage ratio, close to 100% lot coverage ratio. If you go to a 2.5 FSI, you've got a 2.5 story building at that lot coverage ratio, right? Or 5 stories at 50%. Like it's like that. That's not good development. But I mean, it's just because it's all legalistic and it's all done by the intellectual community. It takes a really long time for these guys to get policy through, right? Like, and that's kind of the challenge. And I think that there's merit to that. Like, the province should be sitting with small municipalities and understanding the character of the area so the development fits it all properly. But it's not exceptionally practical. And I think that you've choked up the supply pipeline so badly that like it's obviously not, I don't think a supply-based solution will ever solve housing affordability in Canada, but it's certainly not going to cause more problems to expedite development, right?
So you're of the camp that it is not the answer to the problem.
He says the problem's so big that it's only going to put a dent in it, right?
There's no one answer to the problem.
Yeah.
Right?
There's no one answer. Okay, let's go down this rabbit hole. What other problems do we face currently in this real estate market now?
What other solutions are there? What other
Well, hold on. Let's hear the problems first. Don't be so positive. Let's hear the problem first, and then the solution.
Not enough places to go around. There's tons of demand. Everyone's
That's a supply issue, but he said that's not it.
Being driven up.
Yeah, I think you've got low wages.
But what about the greedy developers?
Yeah, I wouldn't say developers are all that greedy, honestly.
What about those greedy developers? Isn't it them?
Impact the margin of an average development. Like, guys are maybe making like a 33% IRR over 3 years. So they're making like, 7 to 11% a year. It's like, is that, you can go make that in the stock market, right? Or you just buy a house and, lever up and you're making it like in a month.
These days. Yeah.
Yeah. I think, I think the greedy developers thing is hilarious because like, you hear it from Toronto politicians who had no objection to increasing development charges by 110% a couple of years ago, right? It's like, well, you guys are getting yours too. And I think I mentioned that on Twitter yesterday. It was like, if these guys care so much about housing affordability, then and you want to increase the supply pipeline, make housing more accessible for those who are marginalized. So maybe if you're a first time home buyer, or if it's going to be a principal residence, you get a rebate on development charges, right? Because they know if they reduce that back to what it was, the developers aren't going to capitalize it into the cost structure for owners. But you could give that rebate to owners similar to land transfer tax, right?
Right now, they're all getting villainized with the 413. Right now, that's the new target is who owns all the land around the proposed 413 highway. Right. Yeah. It's like this developer, that developer, his friend, right? So I get it, and I'm part of the non-development group. So we look at the developers always as hundreds of millions of dollars in their pockets, and they must be, taking everybody to the cleaners, but it's not that easy, right? Well, a lot of money has to be put up too.
It's interesting too, like if you just look at Canada as a whole, right? Like we have this, like every industry in our country has evolved to be very oligopolistic, right? So like you have a bank oligopoly, you have a telecom oligopoly. And I would say that development, especially services and utilities infrastructure, is a very oligopolistic market. You name dropped a couple of guys who own massive pieces of land, and they also service a lot of that land. And so I would say that they're probably more in control of where supply goes than the government. And I actually have no objection to that. I think that's a good thing because they are probably a lot better at making those decisions. So I don't know if I think that capitalistic bullying that's probably happening is actually probably a good thing, right?
With regards to the
necessary.
direction of where the development is spreading out to,
Yeah,
which is basically their land.
their land and their company servicing them, right?
But they didn't
Like,
buy that land because they didn't think things could kind of like follow a natural path towards them. I would imagine. I don't think they bought it thinking that maybe they did buy it thinking they could manipulate the system into coming towards them. What are your thoughts?
I don't even know if it was a manipulation. I think like if you just follow logical growth paths, right? Of like, okay, yeah, like that's the direction of the Highway 404. So eventually it's probably going to reach there, right? And then if you unpack, like even if you just go through and read the Places to Grow Act policy and make the assumption that all of those targets are met, you could go and pick exceptionally good areas to invest in real estate today, right?
But nobody goes and says, I think this completely barren, away from everything parcel of land is going to be the best thing in the world. Maybe they do. I guess you buy a big piece and hope 50 years down the road it's going to be like a winner.
Yeah, those guys are generational.
And I guess those
wealth
guys,
buyers.
yeah, and those guys can kind of like line a few pockets and get things to come out the way they want.
Even if it's not like collusion, I don't even know. Like,
How could
I
it
think that
not
just,
be? It's almost designed for there to be collusion.
for sure. Like, I think that it wouldn't surprise me if there was, and I think that there's been a lot of indication that there has been. Like, it's not hard to find information that alludes to that being the case. But I also think the reality is like, if you assume that we have like this land scarcity or the greenbelt sort of pushes development in certain directions, like things have to eventually expand out there. And if these guys are buying on and a lot of it's just inventory and scale, right? So they're buying based on like, they're like, okay, maybe we got a couple of pieces of property in Vaughan and then they developed those 20 years ago. It's like, well, where are we going to go next after that, right? Is it more likely, should we buy something further out in Vaughan or in King where, the service pipeline is, or like the municipal services is 20 kilometers away, or should we go get a bigger tract of land right on just outside of the urban boundary of, Bradford or Innisfil or,
How many people are there in that game? It doesn't seem to be like, yeah, it's got to be a really
That's what I'm saying, right? It's
tiny.
evolved to be a oligopolistic game. Like land banking is very much that way.
Yes.
And then it's, even if it's not, like, if you just think about just the economics of it, if it's not collusion, which again, it wouldn't surprise me if there was, but if it was just the economics, if you want to get a piece of property put into the official plan, it doesn't make sense. Like when it's next up for review or whenever the municipality runs out of residential land or whatever, you could do that with a small infill site, 1 acre. And it's going to cost you the same amount of money as it would for 200 acres that you can build a massive master plan community with thousands of dwellings on. So the economics just make way more sense for you to buy that piece of land, pay the capital costs and the taxes for that period of time, and eventually get a massive piece pulled in rather than a small one. And it gives you the buying power when you go to the municipality and they're like, shit, we have to get a ton of units online in the next X period of time. And it's like, should we go and approach, or should we go and talk to these 10 small cap owners, or should we just go to that one big guy because we know he can do it? He has the ability to execute it in-house, right? These are fully integrated companies. It's simplicity, right? They've designed themselves to be perfectly approachable by municipalities. Like they do the town's job better than the town. They have in-house planners, they have in-house servicing engineers, etc. They can solve all of the problems.
So they figure it out.
Town has to go to them almost for like the answer.
Yeah,
for sure, they are the
resources
answer.
aren't there. Yeah,
for sure.
Let us know when you guys are ready for us. We're ready to go whenever you are. Like we've
we'll
got
have a boat.
For a small town, it's a
so-
blessing to get one of those guys to buy in your area.
But that would
Yes
that would
yes or
lead
no?
to
Yes or no? Are MZOs the answer that they're using? to make all these decisions?
I don't even know what that is. Sorry.
The municipal zoning orders that the province has, where they come in and they say, well, we're going to be able to just push aside all this legislation and protective land to free up space.
Conservatory what?
So it's actually interesting because from my perspective, I haven't seen much of that, at least where I am. And I know that I think that there was an attempted
Pickering.
one. And yeah, I know there was a couple there. And then, but I actually was in sort of like the Greenbelt review process at King Township. It was almost 10 years ago, because I think the next one's coming up every 10 years. And I was sort of in the support process of pulling a couple of pieces of land out of the Greenbelt they were strategically located on the highway there. And like I worked in the municipal government, and that's sort of where I got, my start in understanding development, at least. But I think that the good stuff is happening in almost like a more collaborative approach, right? So you have a municipality that'll just like, I think that there's a lot more conversation and like teamwork that happens behind the scenes than people would anticipate. Like it's not like you can just bribe or pay to accomplish a lot of goals. I would imagine that's a channel, but I think that there are traditional and real channels that are happening as well, right?
Sure.
So you don't feel like the government making those decisions on their own is going to be a good thing for development? You think that it should be collaborated between the developers, the municipality, the province, the community, everybody?
Well, for sure, because I think that municipalities don't really understand the economics of development, and those things change every day, right? It's like, right now we're in the secondary plan review process in Georgina, and they want to increase the density from 6 stories to 8 stories. And we're saying like, nobody's going to build 8 stories, right? Or not, sorry, they want to increase the height allowance. It's like, because as soon as you go above 6, you're building out of concrete. So if you want to make the economics work, you got to increase that by almost double to make sense, right? So I go and increase it to 8, but you will not see an 8-story building until you get that higher, right? And so like they don't, if you're not immersed in the private sector development world, you don't have an understanding of how that works.
Makes sense. Yeah.
I don't know that they care about the economics, right? I mean,
They don't.
From our perspective, we think that they should, because that's how it kind of gets done, right? But they don't care. It's like, we want 8 here. We think 8 would look right, even though everything beside it is 2 right now. 8 is the number.
Yeah.
Forget about the fact that 6 is built out of wood and costs half. Doesn't matter.
Yeah.
Why don't they increase the height of wood to 8?
That's the Ontario Building Code, and that's a whole different story. I mean, I think that the Sidewalk Labs project was sort of supposed to set precedent on that, but that was a disaster. So
that was more timber built rather than actual wood, like.
Yeah. Well, there was like tall timber and like a lot of like LVL stuff and, just innovation, like, cause you see it in BC, right? Like, I think their height allowance for timber structures is quite a bit better than here. Right.
So I think, like everything you're talking about sounds like fairly easily it seems that there's guys ready to go that could put a lot of supply on the market, like relatively quickly.
Yeah, but then you come into like other problems. Like you get guys who are assembling land in Georgina as an example. Like, and it's like, yeah, sure, everything checks out, all of your zoning, et cetera. But now we don't have enough sewage allocation, right? So it's like you can't get enough shit in the pipes to make that development worthwhile. So yeah, you're gonna have your zoning, but you can't build, or you could even build it. You could leave it vacant though. You can't occupy until you get that allocation. You either have to pay for allocation units, or like you're seeing developers. And again, this is where the big guys come in handy, right? Because they have the resources to build their own pumping plants or upgrades water and sewage systems. And like, we saw it in the north end of Georgina, where a developer basically fully upgraded the pumping system to get, I think, 350 units online. And maybe that added above and beyond what he was building for himself, maybe 50 to 100 allocation units. But that's only 50 or 100 more bathrooms and kitchens that you can, put into the secondary plan land. Like it's not meaningful enough.
Yeah, that's the issue. And Toronto, I think the other issue. Go ahead.
I was just gonna say, like, when you think about sewage, the challenge is like in the GTA, when you come back to these conservation authorities, even if you want to develop in green, like a greenfield land or like wipe out piece of land that you should be able to develop on, that's rural, and you could sever it up and put a bunch of estate lots or whatever. You can't, in a lot of cases, because if you're in conservation, you can't put a septic tank, as an example. So you can't even really build without services infrastructure because they want to limit what kind of stuff is going into the groundwater, right? Like they want to try and limit contamination there. So it's just adding hoops to jump through but everybody is claiming that the ultimate goal is to get supply, right?
So there's no end in sight for the supply constraint, right?
I would say no, definitely not.
Like,
And I think like when you talk about other things that I'm worried about, it's like, access to credit, inflation, wages being too low. And then I think like, if bond yields continue to rise in an effort to cap inflation and we lose Canadian dollar increases against the US, manufacturing starts to slow, et cetera. That's sort of where that thesis about the US getting that stimulus could kind of not really create much value for us.
That sounds a little scary.
Yeah, the macro is scary, man. Honestly, like it's just whether or not consumer demand can continue to perpetuate this growth. Like at this point, it's just a consumer psychology mystery, right? Like, or will the fact that our economy is pretty shit and we don't have COVID under control actually eventually trickle into the housing market?
So is everybody that you're seeing in Georgina buying right now end users?
Yeah, I would say close to 100%. It's very. I was doing some investment stuff earlier in the year, but I would say they've almost all exited. Like I'm doing in like portfolio purchases like way out in the middle of nowhere. Like I think I've done like I don't even know how many units in like Cornwall, right? Or like I have guys looking at like Kirkland Lake and shit like that, because that's how far you have to go to get a yield. Like I have investors who are like, send me a 6-cap deal any time of the year and I'll buy it, right? And you can't find them. No. Right. Yeah. And Cornwall is as far from Montreal and Ottawa as Keswick, where I am, is from Toronto. Right. So.
Yeah, it's tough.
Crazy.
What we're seeing in Toronto is we're seeing people speculating, so that people are buying second houses. People are buying flips. People are buying houses because the market's going up. Yeah. You're only seeing those people probably coming from Toronto, moving up into Georgina, or people moving around Georgina.
There's a lot of maybe
probably both.
Yeah. I just think it's a lot of it's all small cap activity right now, right? Like your individuals, end users, whatever. I'm not seeing like the big investors that I know that are purchasing and just slowly accumulating as many units as they can. They're not active right now. A lot, like I've had big investors, big, really smart guys that I trust selling. A lot of them are selling right now because they're like, the prices are amazing. I want to go reallocate my stuff elsewhere. Like, and I've had guys buying down south in the States, or, going to smaller markets in Ontario, or all over, like a lot of guys going to Calgary, right?
The States is way better numbers. Like when you look at deals in the States, it's like, oh my gosh. And there's so many places that have these type of deals.
Yeah.
And the credit environment's amazing. Like if you're a realtor, you can go down to the States, get underwritten on your gross and buy with like 10% down and go pick off like 5 or 10 caps that even if you're buying interest only
100% of the rental income.
Yeah.
Yeah. Yeah, it's a good market down there,
So is there?
I guess that's the stability that we have here, right? Like there's give and take, right? Like that's the we owe the 2008-9 Great Recession and the fact that we came through it to the stability in our lending policies and stuff like that too. So, but now it's kicking us in the pants. So,
but in an environment where you're always able and willing to continually print more money, which is not in any of the current logic, right? It's not in any of the actual theories where you just constantly print more money and everybody else around you is doing it simultaneously. Like you can't really apply normal economics to what's going on. I don't think that there's a scenario where the entire world goes kind of socialist simultaneously and prints all the money that they can at the exact same time. Normally it's like, Zimbabwe's out there printing all the money they can and inflating themselves to death, right? It's not always everybody is printing, $1 trillion simultaneously.
Yeah. No, I would agree. I think at this point you sort of just have to hope and pray that MMT, modern monetary theory, is correct, right? Because at that point it's like we've just seen deficit upon deficit, and apparently that money is supposed to be circulating in the economy, right? And it is, but all it takes is excessive hoarding or whatever it is and I think that's what we're seeing, is to create disparity between those who have and don't have assets, right? And then down the road, how much more problems does that create? Like I think the new lockdown announcement in Ontario seems like, I didn't think that we would see sort of social unrest but you're seeing protesting, you're seeing like a lot of pissed off people, right? And small businesses, like 60% of them closed. Like, I don't understand. This doesn't seem like a place where where houses should be increasing in value at the rate that they are.
Yeah.
No, nowhere, but everywhere is, right?
It's all over the world.
Everywhere
Like
around the world
the
is.
agents I talked to in North America, it's identical story.
Has there ever been a situation where the U.S. real estate market was on fire and Toronto was down?
Not from my knowledge. Maybe in like the early 90s.
I don't know. We're all too young for this question, I think. Not that I'm young anymore, but you guys are young. But like, I think we're all too young for that question. Is it even possible for that to happen? I guess if our interest rates were crazy, but ours are kind of fixed to theirs, aren't they? Kinda.
Within reason, yeah. Like to create a degree of parity between where they want the dollar to be, but the only example I could see where I could think of where there was like a relative, I don't know, divergence between the two economies would be like the late 80s and early 90s. But I think that was more just like a difference in the speed of recovery of each one, right? Like, because they both sort of entered recession at the same period of time, but Canada had much worse impact on the real estate market.
Deeper.
But that's the opposite, I guess, of what you had asked.
Yeah. What are we going to do about jobs? I mean, right now, unemployment, like, I know that these numbers are probably temporary, but like, are we ever going to be going back down to 5% unemployment rate? Like,
did we get new job numbers that I don't know about?
Well, I think the challenge too is like, if you look at how their response to trying to meet these immigration goals that they've set is actually to drop the CRS scores for skilled immigrants, the worst part there is like you're almost creating more problem because you're flooding the labor market that's already impacted by job loss. So you're almost like you're creating more people in line for those jobs, right? So like it's either, from my perspective, it's either like it's a K-shaped recovery and we see this massive disparity form in Canada between the haves and have-nots of assets. And we ultimately end up with a European style housing model where basically it's low home ownership, high institutional ownership, and a lot of renting in urban areas. Like if you look at Munich, like I think like 90% of people rent, right? And then that's ownership becomes a generational thing, or things correct and create what would be potentially a fair housing market for everyone. But then you kind of screw the boomers and their retirement savings, right? So we've literally arrived at what I would say is a lose-lose situation. Like there's no good way out of this.
Yeah. So in New Zealand, they're starting something new, which they were the first ones to introduce this is an article this week. They were the first ones to introduce inflation targeting in the 80s. Yeah. And now their interest rates are not going to be based just off their target inflation. They'll let inflation rise. They'll also base it on their unemployment numbers as well, too. So they're going to try to stimulate the economy by keeping interest rates low, not just so they'll let inflation go up higher if they have to, just to make sure that the employment situation is going to improve. And if that comes to Canada and the policy that we have here, which I think the US has similar, that could end up impacting us because the job market, I don't think is coming back.
It's a weird thing to tie things to now when all of a sudden job markets exploded and expanded to basically anywhere you can draw talent from right now, right? So like to tie it to employment seems counterproductive, but what policies aren't?
The challenge that Canada is going to have with that is that we don't like to tell the truth about inflation either, right? Like
exactly.
And I don't know why that is. I think a big part of it is our pension economy is such a meaningful part of it that forcing them to index at real inflation is going to create challenges for the pension system as a whole. That is really the only reason.
The CPI is
other
flawed.
Than maybe
the CPI is flawed. That's what it is.
Super flawed, but like they shift it to make it more flawed regularly, right? So it's like that's where we're going to see some real challenges. And then seeing like the UK and the US ramp up their immigration to compete at like what's more compelling right now to go if you're somebody who you go to Toronto, you go to a couple places in the UK, across the US, and then you go to like Toronto, Vancouver, or every Canadian city, and you try and buy a house and start your life and get a job. Where are you going to ultimately land, right?
Yeah. Why would you want to come here? We've got a graph that I don't know if we're going to show today or not, but
you both actually, you sent it to me and I saw it was on Daniel's Instagram. You want me to show that right now?
Sure.
Let me see if I can figure
Is that
this
the
out.
price is rising?
Yeah.
Yeah.
Oops.
Right.
Hold on. I
So
don't
yeah,
want the
that's actually
sound.
that's a really good point. Is how do we attract the best immigration, the quote unquote the people that we
Whoa.
want to have here, when our house prices are so far out of control compared to all
Maybe
these
that's
other
what
places.
they've tried to let the house prices be the barrier to entry. So it's like, yeah, you can only come here if you can afford it.
If you
So
can
you
afford
better
this,
be
right?
rich and
We'll
smart,
stick you
right?
up in Timmins or
Yeah. Well, but I mean, hey, man, maybe that's a solution, right? Like I've been saying for a long time, like, we got to start diversifying the Canadian economy, and, EVs require a lot of nickel, lithium ion, et cetera. Like Northern Ontario is a place that I'm pretty bullish on,
Oh
honestly.
yeah, 100%,
nice. Yeah.
100%.
Especially
Just for
I've
that
been watching
one
the Sudbury
reason.
market. That's the only market I've been watching, the Sudbury market, and it's crazy.
Yeah. 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 Sudbury's insane now. I mean, it's like a 4.5 cap market. I've seen like 3 9 caps.
The yield's cut in half in the last 12 months.
Yeah.
I
Yeah.
I think you touched on it before. I've been talking about it for a while. I mean, I think the sooner people around here get used to the idea of renting, the better off they're going to be, because it is
sure.
definitely going that way. Did you guys see the video? Everybody saw the video? We are growing at a pace. Yeah, well, it's on the screen. Oh, maybe you guys
You're
didn't
not
see
sharing
it.
the screen. Darryl.
Well, you know what? Listen. Everybody knows how
We're gonna post it
technologically
on our
savvy.
Instagram. Okay? We're gonna post it on our Instagram.
The
Now
video.
you got to go to the.
No, you guys didn't see it. Actually, the way I did it, it was on the screen, but you guys didn't see it. I apologize for that. But you guys know what it looks like. But basically, we've outpaced the rest of the world in our value of real estate considerably over the last, 20 years, since 2000. Now,
I gotta wrap up here anyway, so you guys can toss it on after. But
we're going to toss each other off later.
So let's wrap it up here. So Dan, and it's at the end too. So thanks for reminding us. So we want to know what is the solution? What is the best way out of the situation that we are in right now? And what do you think some of our listeners should do right now if they've got the money to buy, or they're thinking about getting their first house or buying a rental? Where do you see things?
I would say find the cheapest place that you can rent, that's close proximity to work, and learn how to live minimally, and buy high yield investment properties somewhere far away where you can afford them. Like yield is how you make money in real estate. Speculation doesn't work. If you want to be a stock trader, trade stocks, right?
Beautiful.
That's my answer to the question. And my answer to the government and it's too late for this solution, but how do you fix the market, would be let it burn. But I think that it's probably too late for that too.
That is a great place to end it. Let this place burn. You
have to, like,
at some point it's gonna burn. I don't think it's gonna be for a while though. Like, there's a lot of people interested in keeping this thing afloat, and it seems like there's a lot of other people interested in letting them do what it takes to keep it afloat. So I think we're gonna be riding this wave for a while. It's gonna be interesting and scary, and I think I wanted to touch on this, but we don't have time, so we'll have to maybe talk to you another time. But it was great to meet you. Thank you so much for joining us today.
Sorry, I had the cap there. I got to go and run to do some showings.
No,
no problem. Go sell some real estate.
Perfect.
That was great.
Thank you guys.
Thank you so much. We'll talk to you soon.
Have a good weekend.
Okay. Take it easy.